And we're sticking with the livestock theme for markets this week. I was joined by Oklahoma State University's Derrell Peel to discuss cattle. Winter beef demand, this week's cattle on feed report, and exports, all in the news this week. But I began our interview by asking Derrell to catch us up on the corn market and how that's affecting the livestock sector.
We've watched this corn crop get a little bit smaller in terms of our yield estimates and so on. Combine that with strong export demand. And the bottom line is we've put about $1 on corn prices here in the last couple months. And so, $1 higher corn prices is roughly going to increase feedlot cost of gain about 20%. So that begins to have an impact. It doesn't mean that feedlots don't want to feed cattle, but it does change kind of what kind of cattle they want to feed and so on. It tends to put more emphasis on heavier weight cattle. They'd rather buy the weight and not have to put as much of it on when feed cost in the feed, cost of gain is higher in the feedlot. So producers that are in a position to be looking at a backgrounding or a stocker type program may want to look at those kind of implications and any impacts that might have on the type of program they might want to run this fall and winter.
And speak to us about any feeding alternatives we might want to think about. Is there anything a producer could supplement that corn with?
Well, in terms of the basic feed grains, the whole complex has basically gone up. So I'm not sure there's a lot of trade-offs that really become apparent. Wheat has gone up, so corn price, if it goes up relative to wheat, you can get to a point where wheat comes into the ration. Certainly there may be some cases where there's some feed quality wheat that's around. I don't know that there's a lot of that around, but if there is, it may look more attractive now than it did just a few months ago with cheaper corn. So, but other than that, I'm not sure we see a lot of changes at this point. Obviously, some of the co-product feeds and so on, producers need to evaluate those and see whether they provide some additional opportunity in this kind of a market.
Okay, Derrell, for our next topic, if you could give us your thoughts on winter beef demand. It's that time of year when normally we would see a more restaurant-oriented or going out to eat type of demand around the holidays, but this isn't a normal year here in 2020. How big of a concern is winter beef demand for you?
Well, it has been a concern as we transition into more of a winter type demand. We do tend to see more emphasis on food service and restaurant type demand, and obviously there's significant restrictions there and potential for even more restrictions in the coming weeks. And so, it's a little bit of a mixed bag. If you look at some of the wholesale beef cuts, things like ribeyes, which are very popular for Christmas and New Year's holidays, a lot of that buying typically gets done in November, and we've actually seen a fairly normal seasonal pattern. We've seen an increase in ribeye wholesale prices, and their prices are pretty close to where they were this time last year. On the other hand, if you look at something like tenderloin, which is almost exclusively a restaurant menu item, those prices are significantly weaker than a year ago, down about 25% at this point in time compared to a year ago. So I think there's a likelihood that we're going to continue to see some challenges through the winter, and it may be kind of a long winter, and it may result in some additional kind of impacts in the overall demand situation. Now, retail grocery demand continues very strong and maybe very robust, and so we continue with some of the challenges we've had all through this in terms of the supply chains and the ability to sort of move product from the food service supply chains into the retail grocery supply chains.
Okay, we talked about demand here at home. What about beef demand overseas and how that's impacting export markets?
Well, the export markets, of course, they took a hit after we had such a disruption in production, but really they've kind of bounced back. And in general, I think we're doing okay on the export side. Most of the markets, the one exception to that has been Mexico, which is a significant export as well as an import market. And we're seeing significantly reduced exports there as well as increased imports. They're in a very serious economic recession in that country. But, our other major markets, Japan, South Korea, are holding pretty well. And we are exporting more beef to China. China's still a minor market for us at this point, but it has grown and set new records the last several months on a month-to-month basis in terms of the amount of beef that we're sending to China. So, with several more months ahead, with enough time, if this continues, it will grow to be one of our more significant markets.
And Derrell, we're airing this interview right about the time the November Cattle on Feed report is released. Give us an idea of what you're going to be looking for with that report and some things the folks at home watching might want to pay attention to as well.
Sure. You know, the last several months we've had lots of ripple effects in many of our markets, and the cattle on feed has been no different. We've had dramatic volatility in both placements and marketings. Most recently, we've had 3 months of very strong placements, kind of making up in some sense for earlier reductions in placements. And as we go forward, we're expecting this November report to show reduced placements on a year-over-year basis. We're going to be above a year ago levels, we anticipate, as far as the cattle on feed total, but we're slowly sort of pulling it back to a little more stable kind of an environment as we go forward.
And we'll end things today with any marketing or risk management advice that you'd like to leave us with as we move through November and into December.
Well, obviously this has been a very unusual year, lots of volatility above and beyond anything we could have imagined, and it's not over yet. This is still a story without an end. We're very much still caught up in the public health situation. We've got ongoing macroeconomic issues. I think the cattle industry itself is in relatively good shape as far as the internal factors, but lots of external volatility. So that means producers have to really stay on top of these markets, have to be nimble. Obviously, to the extent that you find opportunities to manage risk, you probably really want to think about that. I don't think the volatility is going to go away anytime soon.